finally, we are seeing some volatility back into the market, creating many great buying opportunities of high quality companies. And it's honestly at these moments of peak fear when we get some of the best returns on our investments. For example, back in April, you could have bought up many great companies such as Netflix, Google, NVDA, Amazon. They were all on sale, and those that were brave and took a chance have been rewarded over the last 6 months. And the question becomes, has that sell-off in the NASDAQ, now down 8% in the last 22 days, is that a gift to us to buy some great companies for a lower price, or is this the beginning of a larger move down over the next few months? Here at the Bullish Bounce, I like to use some data. We like to build a bit of a story, a thesis behind the reason why we make our investments. If we're just playing almost like at a casino, then we really just are going to lose money to the house over time. We all need a set of rules to put the probabilities in our favor and not in the hands of Wall Street. And the rule that I'm relying on today is that if we have a sell-off in the markets due to drama and sentiment change and not due to fundamentals, then that's usually a good buying opportunity. So let's begin looking at one reason why the stock market has collapsed so quickly, and it's all to do with NVIDIA's earnings that came out in the last 24 hours, and the fundamentals of the company are still fantastic. They're still growing profits around 50 to 70% year over year, and they're even predicted to accelerate profit growth over the next few quarters, peaking out at 100% growth. The company's valued at only a forward P ratio of 25, and they just beat earnings by about 3% in terms of profits and also revenue. However, NVIDIA over the years has almost always beaten expectations, so in this case they did not beat them strong enough, and the company came tumbling down today 7.7%. There have also been a lot of concerns because of the exponential growth in the performance of NVIDIA's chips. That makes each previous generation almost worthless in a couple years, and all of that is in the context of NVIDIA's inventories, their unsold parts and finished products, doubling in the last 9 months, leading to a lot of fears of depreciation and lower profit margins in future quarters. NVIDIA might not be the only reason we're having a sell-off, but it's certainly doing a great job at stopping us going back to all-time highs. Now, I've got some other data here to help support just this current environment that we're sitting in. So I've lost access to the smart money index, what big hedge funds are doing with their cash flows. They put their information behind a paywall now, but typically Wall Street hates buying up stock indices and individual companies when they're nearly at all-time highs. So smart money's probably not buying in. And we've actually got the AAII Investors Survey. Now, this is done by amateur investors. We only have at the moment around 30% of investors actually bullish for the stock market in the next 6 months. A lot of that fear is to do with market concentration. So much money just in about 5-6 key companies does make people quite nervous. So that's 70% of all investors are somewhat or more concerned about stock market concentration. That tells us if big tech companies are not going to perform or beat expectations to a massive degree, then those companies are going to get sold off. As always, let's just keep calm and carry on here, not freak out and sell off all of our positions because one company didn't beat expectations by 10%. So at the moment, we are seeing the VIX go up to a 26.4, which is quite high and basically is just telling us a lot of people have sold off in the markets. But what I like about this chart is going back over the last 4 years, we see that we often have volatility pop up roughly every few months. Maybe that could continue for another month or two. This is by no means over already, but we're already getting some massive gifts to us in terms of sell-offs in high quality stocks. So doing these quickly, we have Meta stock. It would increase 35% if it got back to all-time highs. Celsius Holdings, another energy soft drink company, they would need to increase 70% to go back to all-time highs. And Robinhood has just entered my radar really in the only last few days. That's sold off quite strongly and needs a 44% gain to get back to, guess it again, all-time highs. So for the rest of this video, I'm going to make a case study out of one of those names, and that would be Robinhood. There's just so many positive fundamentals for this company suggesting it should go back to all-time highs, and just rinse and repeat your own fundamental analysis for your favorite investments. And it really just goes to show us really any sell-off in the market is a gift, because if the fundamentals keep getting better and better over time, then we should see the stock price also reflect that. Robinhood's revenue growth has been extremely impressive over the past few years, accelerating even faster in 2025 for a few different reasons. A lot of this is due to true innovation by Vlad, the CEO, and just the team at Robinhood. I've got this very short video talking about tokenization and the idea that on Robinhood, you can really bet or invest your money behind almost anything. Sports betting, betting on private companies, you name it, Robinhood is going to have a product just for you.
We're going to get to a point, I think, in the next probably 5 to 10 years where it is ubiquitous. I mentioned in my talk that tokenization is a freight train. It can't be stopped. And I think eventually it'll eat the whole global financial system.
But that's not the only area Robinhood has been impressive, bringing more money onto the platform. They are willing to even sacrifice profits and to give people cashbacks to invest their money through Robinhood.
And this is going to be another big one, their 2.5% crypto match.
Well, I've had an account for a long time, but I put meaningful money into my Robinhood account for the first time this year, which was shocking because that's not something I ever thought I would do. I'm old school, but it was because of the match.
And all of this has been paying off, especially with this crypto boom. The timing of that strategy is just really impressive. And all of that happened really in just one quarter, late 2024. And it's always good to confirm this going through some of the financials here. They've just got a dot point summary. Yes, in the last year, transaction revenue is up 129%. Interest on, I think it's customer cash, is up 66%. And other revenues such as subscriptions have increased 100%, and all of that is heading to a very strong profit margin, increasing profit 271% in just a single year. All of that is very impressive, especially considering Robinhood is only valued at somewhere around a 20 to 35 forward P ratio, and it's really all down to your individual expectations of profit and revenue growth in the next year. Now, I've added it to the portfolio here on the channel, also bought some more PayPal. Again, if we confirm that a bunch of this drama to do with the stock market has nothing to do with fundamentals, it's really probably just Wall Street creating drama, trying to force us all to sell. They can buy up companies for the cheap. Well, how come we just don't do that ourselves as well? If you did enjoy this video, make sure you do subscribe. But also, I've got 2 more videos up here on the screen for you to click on. I hope to see you there next. Bye.